The consumer price index increase rate in December 2023 exceeded expectations. At the same time, concerns about inflation have increased. There is a growing possibility that the interest rates cut by the Federal Reserve, the U.S. Central Bank, will be delayed. Even though inflation exceeded expectations, the judgment that the Federal Reserve's expectations of an interest rate cut in March are valid has been strengthened. Despite the hawkish comments from Federal Reserve officials, the market expects the Federal Reserve to lower interest rates in March. It is closely related to the outlook that inflation has passed its lowest. This is because slow inflation gives room for the Federal Reserve to begin lowering interest rates. The U.S. Department of Labor announced that the consumer price index in December last year rose 0.3% from the previous month. This is higher than the previous month's figure, 0.1% increase, and the 월스트리트저널 estimate 0.2% increase. The monthly increase in CPI in December was the largest in about 3 months since September of last year. December's CPI rose 3.4% compared to the same period last year, exceeding the previous month's figure, 3.1% increase, and WSJ's estimate 3.2% increase. The core CPI increase rate, excluding the highly volatile food and energy, rose 0.3% compared to the previous month, which was the same as the previous month and market expectations. In particular, the rate of increase in housing costs, which reflects changes in prices over time, pushed up the CPI. Core CPI rose 3.9% compared to the same period last year, exceeding WSJ's estimate of 3.8%, but slightly lower than the 4.0% increase in the previous month. Core CPI suggests that inflation is trending lower, but the pace of decline has been slower than expected. A stronger than expected inflation indicator could prolong the wait-and-see stance of the Federal Reserve System. December inflation shows the Fed has more work to do to keep inflation on sustainable path to 2%. The consumer price index is an important way to measure changes in purchasing trend and inflation. Measures changes in prices of goods and services from the consumer's perspective. If the actual figure is higher than expected, it means that the value and outlook for the US dollar are positive. If it is low, it means negative.